What's going on, people? Back with a bang. This is the Money Management, back here to bring you guys another market recap. So the days keep coming thick and fast. It's already 2 days down in this week, and it's been a pretty interesting start to the week once again. Here, let's have a look at SPY because the S&P 500 ETF is currently sitting at $393 and is up after hours after suffering from a red day. As you can see, it opened at 392.56 after closing at 396 yesterday, so kind of dropped down overnight. And as you can see, the first hour of the market dropped all the way down to 387, which was pretty crazy before it started this end of day rally. And also, not only is it up after hours, but the last few minutes before market close, a bunch of different SPX calls started to come in. A lot of them actually expiring next year, but I just wanted to highlight that and point it out for you guys. But either way, we're still in a bear market. So yesterday was actually green, like I had said in my last YouTube video, the one I uploaded on Sunday. And as expected, today was red. Now, I'm going to start with the banks today because the banks are a sector which have been overlooked, I'd say, in the past couple of weeks. And then after we've touched on the banks, we're definitely going to go and look into Snapchat because, as you can see, Snapchat did suffer badly today, like very badly. We'll get into that in a second. But like I said, let's go and look at the banking sector first. So I'm going to pick up JP Morgan. So JP Morgan over the past 5 days has done well. It started from Friday when it was at 115. It just started to rally towards the end of the day, and that continued and picked up into this week, back-to-back green days. So one thing I want to highlight over the banking sector is look at the past 6 months. They're down heavily, right? And we know how the banks kind of roll. It's one of those sectors where you're guaranteed your long-term gains, but at a slower rate than maybe the tech sector or the health sector or energy, those kind of sectors. Banking sector is more consistent, I'd say, because again, look, in the past 6 months, Bank of America now is only down what, $7-8 in comparison to other stocks. So if you look at the tech sector, which are down 40-50% from their highs, you look at the meme stocks, down again 60-70% from the highs 6 months ago. You look at different stocks in different sectors, I mean, excluding energy and oil, a lot of them are down 30-40% since then. Entertainment is the same. But the banking sector, what, you've lost about 12, maybe 15% on the different stocks there. Again, Wells Fargo, Goldman Sachs, JP Morgan, Bank of America, all similar situation. Look, November, $48, now $43. They're not down that bad. So my point here is, this is one of those long-term investments where you can invest and be like, you know what, this is not too bad. It's more like an ETF or one of those index funds where you're probably going to get decent returns over time. You don't have to worry. It's not going to be as erratic as the growth stocks or any of those other kind of stocks. So please don't sleep on the banking sector. Now we're going to go back to Snapchat, as I mentioned, because it was a wild ride this past couple of days. So Snap saw its worst day ever as the Nasdaq fell 2.3%. This is the lowest the Nasdaq has closed since November 2020. That was right when I began trading after a long break, actually. So what actually happened with Snapchat? So it dropped, I think, 43%. And the reason it happened is because their CEO, Evan Spiegel, or even Spiegel, I don't know, slashed the company's forecast, basically explaining that the rise in inflation and interest rates is not good for their business. So even though we already know about the rise in inflation rates and interest rates and all that kind of stuff, you'd think, it wouldn't have such a huge impact on a stock. But because it's the CEO who came out and emphasized it, people automatically fall and usually overreact in regards to these kind of bits of news. So, like I said, Snapchat fell heavily. In fact, we can go look at the charts so you guys can actually get an idea or a better idea of how badly it fell. It definitely suffered. So anybody who had money on those puts, I think there was an 80K order on some Snap puts overnight. I guess that turned into a couple million, I'd say. We can look at the daily chart so we can get a great idea of how this panned out. Here we go. Yeah, if you're wondering what I'm talking about, here we go. Here is Snapchat. Monday, here's Snapchat today. See the massive drop? You're probably thinking, how did that happen? What? How? That's crazy. Yeah, it's an overreaction. Like I said, long term, I'm sure it will not stay at these levels, but I remember when it IPO'd, I think it was about 2018, if I'm not mistaken, maybe 2019, and it was around $13, $14 back then. Oh, it was even before that? All right. Okay, 2017 back then. And it dropped to what? Lows of $9, $10 in 2018, but it actually been down at $4. I do not remember that, to be honest, unless there was a stock split or something. But yeah, either way, at this point, it could next fall to lows of $6. I mean, another 50% drop could be in the works. I would not be surprised. But let's quickly look at some stocks that we traded this week. We'll go start with lows because I traded calls on lows. This went pretty well. Just check out the chart. Go to the 4-hour chart. So I took a $192.50 call expiring this week, and we were actually up around 35% on this before close yesterday, as it was. In fact, let's go to the 1-hour chart, get a better idea, a better look at this. All right, cool. So here we go. As it was trending above the moving averages, breaking above moving averages, it started to uptrend nicely, closed above the 21-day moving average before a huge red candle to start the day in the first hour of the market. Saw our profits get taken and it fall back into this 4-hour support zone. But as always, if you guys don't take profits on time, these kind of things can happen. I did want to point out that it was still up today in the first 15-20 minutes of market play, and actually you had multiple opportunities to take profits. I'll show you guys now. So here, first two 50-minute candles. So as it spiked up here, it came back down, spiked up again, up to $187. That's two opportunities to take profits. Of course, it then fell back below the moving averages. So if you snooze, it's one of those where you do lose. Moving on to Robinhood, which was my next play of this week. Remember the last video I uploaded on Sunday, Robinhood, Coinbase, Netflix, Chewy puts were all on the cards. Robinhood, we should have probably got in yesterday, but it closed above the moving averages, which I didn't like. It was obviously a great entry for puts, but it's a dangerous hold overnight. Either way, today, once it broke below the moving averages and started to break out of this support zone, it was an easy entry for puts. These brought back up to 96% returns at one point, as Robinhood broke below $9, but now it's started to uptrend again. I do think it's still bearish if you look at the different time frames, and we could see how it's below the moving average there, just touched it and hopefully gets rejected. But we could see new all-time lows for Robinhood. I would love to see that, watch it burn down. And it's funny because I actually said Robinhood was a buy under $10 about 6 months ago, but hey, at this point I'm staying very, very far away from this unless I'm making money on short-term puts. And lastly, Chewy. As you guys know, last time out, I made a video of my Chewy puts as a play for this week. My three price targets for Chewy were 24.57, 23.77, and 22.69 to the downside. It hit all of those, but actually we kind of messed up our entry with this one. I'll show you guys why now. So in theory, we should have got in yesterday when it ran up, right? But I was a bit hesitant on it. I said, you know what? We've had a good day. Instead of jumping in now, I'll wait until tomorrow. I waited until tomorrow because I was banking on Robinhood. I missed out my Chewy $23 puts, so I went for the $22.50 puts as Chewy was downtrending because it was clearly bearish. Once it hit this support zone, it started to reverse, unfortunately, and started to rise towards the end of the day. Now it's slightly up after hours. I'm very intrigued to see how it pans out. I don't think this was actually a bad trade. I think we were just slightly late, which is what affected the trade. Ideally, we would have got in yesterday, like I mentioned. If not, we could have got in a little bit earlier today. But it's all good. Not every trade is going to go directly to plan. That is a reminder, though, that sometimes you don't want to necessarily chase, or if a play already seems to be gone, then just leave it and move on. Chewy overall still looks very bearish on multiple different time frames. So if you're swinging for longer out, I wouldn't be worried. This is a little support zone here around 22.74, which is kind of where we actually closed in the 4-hour time frames today. But hey, moving on to tomorrow, let's look at what we're going to look at. First of all, SPY calls. SPY, I'm expecting to hit $400. either tomorrow or Thursday. I think most likely tomorrow. Look, it's already up $1.72 after hours. So anyone who's got SPY puts and swinging those overnight are going to get wrecked. Here we go. I'm expecting it to push into the 4-hour resistance zone before downtrending again. So again, SPY calls are on the radar for tomorrow. Also, Pfizer, ticker symbol PFE. Remember that one? This one made a lot of people thousands of bucks last year in around August time. Pfizer has been ripping recently. Look at the 1-hour chart, quite lovely. It just pushes up, pulls back towards moving averages and pushes up again. This is similar to what the energy stocks have been doing. Checking out the 30-minute time frame, similar story. It's now sitting in a little bit of a resistance zone. I think it's going to push out of that and break up to highs of probably 53.73 before it drops back down. So keep Pfizer on your radar for calls. Of course, we can't ignore Tesla. Tesla could be on for a little bit of a rally if SPY does manage to start rallying tomorrow. Look at the 30-minute chart towards the end of close and into after hours. Tesla did start to push. So keep your eyes out for Tesla. We'll see if it can run 20, 30, 40 bucks in one day again, as it so often does do. So yeah, Tesla causes another one. And then lastly, the energy sector should be on your radar. ExxonMobil, ticker symbol XOM. Can we push back out of that resistance zone and start pushing towards $95? Same with MRO, Marathon Oil Company. Can we push out of that resistance zone and start moving towards around $28.59? So look at the $28.50 course for that. And then of course, we're going to have a look at Oxy as well. Oxy, we're looking at pushing through the 1-hour resistance zone, getting up to highs of $66, so about a $1 gain. It's already slightly up after hours. But again, analyze these on different time frames so you can see where it's best to get your entries. 15-minute chart is bullish, 1-hour chart was bullish, 4-hour chart a little bit more choppy, but hey, it's pushing above this resistance zone and looking to see how high it can get this week. So $66, probably the first target. Eventually you can look to see if it gets up to $69 again, either this week or next week. But that is it for today's video, guys. Make sure you come and check out the Royal Trading Academy for more information. We'll be doing charting, study sessions, the usual breakdowns and all that kind of stuff in there. Also check out the stock option starter pack. I know a couple of you guys have grabbed that over the past few days, so hopefully that can help you guys out when it comes to trading options. As always, check out all the different links in the description. We have links to Coinbase, to Robinhood, to Chatterquant, to Celsius. Just go and check out all those different links, guys. And overall, thanks a lot for watching. Make sure to drop a thumbs up, comment, subscribe, and also share these videos. I go into making, you go into making. See you guys next time for another video. Peace. Game over.